So he's here then, Owen Fairclough. The markets, they're broadly up against the euro gain for now.
Yeah, it seems so, Stuart, but let's not get too carried away. The Nikkei is still extremely depressed, still trading at around the 8,500 point mark, but let's take what we can while we can out of those markets, up by around 0.1%. The Hang Seng and the Shanghai Composite having a reasonable day's trade. Just while I mentioned Shanghai, worth mentioning BYD. This is one of China's largest and newest car manufacturers. Its share price down nearly 9% in Shanghai trading this Monday. That's after reports over the weekend that one of its electric taxis was involved in a fatal collision and exploded, killing the taxi driver and 2 passengers. BYD have confirmed they are cooperating with authorities in the city of Shenzhen into the investigation of that. No confirmation that it was a BYD vehicle involved, but there are reports that it was the battery in one of these cars that may have exploded. This firm is perhaps better known because Warren Buffett was one of the early backers and thinks it's a company to watch out for.
OK, keep following that one, of course, here on France 24. So a positive start then on the Asian markets, as Owen is saying, and that's despite Spain taking centre stage again in this Eurozone crisis. The government's nationalisation of struggling Bankia has left investors high and dry. It's propping up the firm with nearly 24 billion euros, a huge outlay for a government that's supposed to be cutting back. And it's the methods it's using that are drawing the European Central Bank uncomfortably close. Stephen Carroll explains.
It's a rescue package with a twist. After its shares were suspended on Friday, Bankia did a deal with the government for a second capital injection, this time of another 19 billion euros. The troubled bank, the country's 4th largest, was formed last year by the merger of 7 regional lenders. It's been plagued by financial worries since, with an estimated 32 billion euros in toxic loans secured on property whose value has collapsed. Shares in the bank have halved in value since they were first floated last year. With this injection, it will have been recapitalised to the tune of 23.5 billion euros. Bankia says it's treating the money as a final investment that will make a profit for Spain.
We think this group won't need any further aid or additional capital. We also think we now have a solid franchise from a financial point of view.
Spain's banks were first in the queue when the European Central Bank handed out cheap loans to European lenders, taking almost a third of the capital on offer. This time, instead of a direct injection of state funds, Spain has given Bankia government debt, which it can use as collateral with the ECB. It's a move designed to keep Spain's government borrowing rates away from unsustainable levels. But it also implicates the ECB in the state rescue of a bank, something which may raise eyebrows in Frankfurt.
Well, it's complicated stuff, Stuart, as you can see, but essentially this is a story about moving money around and trying to put debt in places where you normally couldn't. The problem with Spain right now, as we heard in that report, is it can't go out to the international money markets and raise money on behalf of Bankia because its own borrowing costs are becoming unsustainably high. If we look at the chart for borrowing on 10-year government bonds, the yield, that's the amount of interest that investors will charge the government for holding that debt. It's up now at nearly 6.5%. OK, it's not as high as it was at the height of the last Eurozone crisis in the summer and autumn of last year, but we're starting to get into bailout territory there, and that's the problem. And what the Spanish government have done is, rather than trying to sell debt in the open markets, they've actually given Bankia debt so that it can then go to the European Central Bank and get credit from them. Whatever it does, it's bringing the European Central Bank uncomfortably close to the Spanish government. You have to remember that the ECB is banned under its mandate from directly financing governments, and yet it's starting to look that way, with just Bankia sort of standing in the middle, if you like, as a receptacle for all this cash.
OK, I was just going to mention this incredible story, really, over the weekend, to do with tax evasion. Been getting a bit of an airing thanks to Christine Lagarde.
Yeah, always a big subject when it comes to countries like Greece, Stuart, and Christine Lagarde has certainly added fuel to the fire in that, with an interview she gave to a UK newspaper just before the weekend, essentially saying that Greeks were to blame for their country's woes and really rounding on Greeks for not paying taxes. I think she got something like 30,000 responses on her Facebook site for this over the weekend, with many Greeks very angry at her comments. She has defended them and said she's very sympathetic to the plight of the Greek people, but wants it to be known that this country needs to do more to stop tax evasion.
OK, we're going to pick up on a few more of the day's business headlines now then, and the former Olympus chief executive, Michael Woodford, is taking his battle against the camera maker to a London court. Woodford is seeking a reported $60 million in compensation from the Japanese firm that fired him for blowing the whistle on an accounting fraud. Judges will need to decide if the case of unlawful dismissal can be heard within UK jurisdiction before the case can proceed.
Staying in the UK, the number of retailers going bust jumped nearly 40% in the first quarter of this year. Accountancy firm Wilkins Kennedy found that 670 businesses folded in the fourth quarter compared to the fourth quarter of last year. Figures out last week showed the UK economy contracted even more than first thought by 0.3% to put the country into a second recession.
And tourists may soon be able to visit Beijing without a visa. The Chinese government is considering relaxing entry requirements for visitors who stay for just 3 days. Cities like Shanghai already have a similar system in place, while organised tour groups can have up to 21 days. Analysts say it's the latest move by China to open up to more foreign direct investment.
Now, if you've been in Northern Europe over the past few days, lucky you, it's been an absolutely cracking weekend weather-wise. It was even hot in the UK. Cannes, strangely, I think it rained for most of the Cannes Festival, didn't it? I think it rained.
Did down there.
For the last
here for the weekend.
Well, that has contributed in Germany to huge gains for the solar energy. In fact, on Friday and Saturday, solar plants across Germany produced as much energy as 20 nuclear plants. And yet this is a very difficult time for the German solar industry. It's thrived largely off the back of government subsidies over the past few years, but is now suffering due to Asian competitors. And now a huge number of businesses in the solar energy are going out of business. Our reporter in Germany, Anne Maye, sent us this report.
The outlook for the German solar sector is bleak. 4 companies making solar photovoltaic panels have filed for bankruptcy in the last few months, amongst them Solon. The company was saved by an Indian investor who restructured it, cutting jobs and closing factories. Now Solon is in niche markets, such as industrial solar roofs.
To survive on the international market, you can't carry on making the standard solar panels because the Chinese are doing it a lot cheaper, and the quality of their products isn't that bad. There's not such a huge difference anymore.
Gone are the days when German factories churned out their subsidised panels. Competition from Asia is now fierce. In 2011, the price of solar cells went down by 50% as demand dropped off. Some companies didn't react fast enough.
Last year, production capacity worldwide was more than 40 gigawatts, yet demand was only 22 gigawatts. Supply greatly outweighed demand, which forced the price down dramatically.
But it gets worse. The German government has recently cut subsidies to the solar sector. That makes Germany less attractive to investors and could mean German companies are left high and dry.
The number of new solar power stations is expected to go down, and of course every investor will ask themselves whether it's advisable to put money into production sites in a market the authorities want to see reduced.
It seems the fate of German solar power is sealed, and that will mean tens of thousands of jobs are on the line.
Just a final word from me. Do stay with us after 9:15 Paris time. We'll have our very own Rebecca Bowering, our Tech 24 editor, with us on set. She'll be looking at whether there are too many camera applications around these days.
Fantastic stuff. All right, that's in just over an hour, well, about an hour and 15 minutes time here on France 24. Owen, thanks very much. Claire's got the latest headlines. Stay with us.